Very, very choppy conditions lately in the markets. As you can see here, we do have this upward wedge that we're in right now. You can see the bottom support level and the top resistance level. We've been trading within this since we had a major low during CPI where we had that big squeeze off of there. Been trading within this. However, today we did break this wedge to the downside, which typically is bearish if you break a wedge to the downside. However, you need to see if we get more confirmation, especially tomorrow, because typically in the past when you have breakdowns of serious patterns or wedges like this one, it is still possible to reclaim back into the wedge, especially if we were, for example, to have a gap up tomorrow to back into the wedge, which would be roughly around 3,718 roughly on SPX. If we did gap up back into it or push back into it, especially during the first hour of tomorrow or Friday, then it is very viable that this thing could get back in and squeeze up to at least attempt the top part of it here before falling lower afterwards. So you do have to be careful of that. A scenario like this would be considered bear bait. That's how I just consider it, just because this type of thing right here would bait in a lot of bears to short, thinking that we have a lot of downside left, because we did break to the downside here, and there seems to be a lot of bearish public sentiment out there, so this could be a viable scenario for sure. However, there's also a lot of risk when you're in this area over here under the wedge, because everyone knows that this thing could flush pretty quickly if it is staying under for quite a while, or if any bad news happens while it's under the wedge. So it's very kind of like worrisome to go long under this. So a pretty difficult spot for SPX at the moment. So if you are a bull, you want to see confirmation to get back over into the wedge. And then otherwise, as long as it stays under, it would subject to more bearish emphasis going forward. I do want to look at the flow here. We have not seen as much bearish prints or as many bearish prints throughout this week. If I just look from today, yes, there are a decent amount of puts. However, we haven't seen those super far out the money ones. We did see two notable ones this morning. We saw the 365 strike and 360 strike for 1.4 million and 1.3 million. These are not as substantial as some of the ones we were seeing in the past weeks. If you remember, we saw a lot of like 350s, 354 strikes that were also like around the 1118 expiration that were above the ask. So these are decent puts, but nothing crazy. We haven't seen a substantial amount. We did get this one over here after hours, 348 strike for 1.2 million. So still a lot of puts, definitely today. If you filter it for over 1 million in premium, it was 100% puts to 0% calls. So pretty put heavy still in the market. However, just compared to what we were seeing before, nothing too insane. And I will go over to the dark pool prints here. We did see $1.5 billion worth of premium for the 370.92 level. This is for signature prints. So not an insane amount of premium. However, it's not small because we still are above 1 billion. So definitely a decent amount. However, I'd like to see some more confirmation of sell pressure up around this range. As you can see over here, this was a print near the highs of this rally that we have had so far. I'd like to see a few more days over at least 1 billion to kind of get that confirmation that potentially a top could be in for this move, because as of now, it just seems a bit early to determine if a top of this rally is in. And as you know, in previous bear rallies, the bear rallies can go a lot farther than people assume, especially when people start to get bearish. It tends to go a lot further after that. So you have to learn from the past and kind of get a sense on, hey, is this a good viable spot for me to short? If you have risk reward there, then it's up to you and your risk mitigation. However, right now, it just seems a bit early, in my opinion, to be shorting this. You'd like to see more confirmation, like for example, under 3,648 that I have right here. This level was a previous channel, as you can see back here. We have the top resistance at 3,718 and the bottom support at 3,648. You can see that we had a support 1, 2, went under right here. And this actually was a bear bait scenario. And I'll just go over this really quick. This was a breakdown of the previous support you can see right here at 3,648. We actually broke down below and it closed right below this level right here. So this area over here baited a lot of bears to short this, thinking that we would continue lower because we were under the channel that we were in before, between 3,648 and 3,718. However, the following day we opened right above it, as you can see in this 15-minute candle right here. And right after we opened above, it stayed above. We never went back under it. As you can see, we touched it 4 different times for an hour straight, because each one's a 15-minute segment. And then it bounced up and continued to squeeze a lot higher and then closed right on top of my top line up there. So this is a bear bait scenario. Now, am I expecting this to happen? we'll have to see, wait and see, basically. However, this could be a scenario that you see, and it would take out a lot of people that were bearish today. So it's always good to be malleable, always good to know potential scenarios going into future days like Thursday and Friday of this week. And just over here is a perfect example of what can happen before the eventual outcome that you saw right here, where we fell a lot lower and made, at that time it was the yearly low, roughly around 3,585. So these are things you definitely need to watch. Another thing that you need to watch is the VIX. Over here, very interesting. As you can see, the VIX technically closed right below this channel that we have right here. Not too big of a deal because it still could gap up above this level. Everything is dependent on the gap tomorrow and Friday. It's going to be exceptionally useful to check where the gap is, because if we have a big gap up, like I shared with you earlier in SPX, and we have a big gap up back into the wedge, that'd be very, very bullish, and this would be bear bait. Like I said, same thing applies to VIX. If we were to have a gap up and hold above this channel over here, then that'd be bearish for SPX in the inverse here, because volatility would remain strong as long as it stays above, because otherwise, if it stays within this channel, then it's weak, and it's probably going to test the lower end of this range, which would mean further rally in the market. So the gap is very, very important tomorrow. Another key metric that is going to be very important is DXY. As you can see here on the 15-minute chart, we had roughly three bounces off this line. And if you remember in previous videos, this line over here was the previous upward wedge, kind of like what we're in right now for SPX. It was a previous upward wedge that broke to the upside, retested during this week, but then bounced back up. And now this is the third time we've touched this line and it bounced off. So the dollar still is maintaining its strength above here. And as long as it stays above here, volatility will most likely remain in the SPX, because this will bring some form of weakness to the general market at the moment. So you definitely want to watch DXY, especially if it can get above, and this is just a rough trend line for you right here, but if it can get above a trend line like this up here, this would probably mean that there is more upside for it. Other than that, though, it's probably going to chop within this range and decide which direction it wants to go. A little bit further, closer to November, I would expect it to decide where it wants to go there. But something to watch, because today with the dollar strength, it was very difficult for the market to catch a bid, and as a result, we were pretty choppy all the way around. Something else I want to talk about, if you remember my last video, I was very bearish on Tesla. We did have a little bit of a bounce early in the week, kind of like I did expect as well in that past video from the Sunday weekly prep video. But we did have a big gap down. You can see the post market, we're at 210.35. This is after the earnings. Now, it wasn't too big of a post market move. Now, in the past, Tesla has moved quite a bit in the post market. So there really is probably a premium burn for most people that took like lotto options or anything on Tesla. But we still are down in the day. However, it's definitely important to note that, one, we still are above the yearly low of roughly 205, 204 high. And also on top of that, SPY is still technically up after hours, after we had the news over here for the earnings report. So Tesla's weight in terms of how far it fell down did not weigh as much on SPY as some people may have thought, which can be interesting. Now, does that mean that SPY can't catch up in the future session and ES can fall? No, it doesn't mean that. However, it's going to be interesting to note over the future session what's going to happen here, because Tesla did end up falling after it had the earnings report, but SPY did not have that much of a weighting in terms of how far Tesla fell, so it's still holding up relatively, which is definitely something that is useful to note there. And we're going to check up tomorrow, especially at that open, to see where the gap is, to give us more insight on what can happen on Thursday and Friday of this week. Also with Tesla, I found it very funny. Look at this print right here. This came in at 3:59.55. This is 5 seconds before the close, because this is Eastern time over here. Tesla, we saw a put out the money for 215, 1021 expiration, so that expires. This is the weekly options, and we saw 1.7 million worth of premium. This person predicted that we would have a down move after Tesla had its earnings report. And again, could you know with 100% certainty that they knew? No. However, very, very weird to see this came in 5 seconds before the close. This is the weekly options, out the money put, and also 1.7 million in premium. This person probably knew what was going to happen afterwards. And some of these prints before earnings can be very useful to check, especially right before the end of the day, because they did sneak this one in before anybody else could. But pretty funny to see, or I guess it is funny in a sense, but also kind of annoying to see that this person did profit off of it, because they most likely had some form of insider information. But unfortunately, that's just how it goes. And that's why we like to check and see what the whales are doing, because sometimes they know what will happen and what the eventual outcome will be afterwards. So very interesting to note how this turned out afterwards, because of Tesla's big sell-off after hours. One last thing I want to talk about in this video, and this is a very important subject here. I'm looking at tech right now. I'm looking at the Qs. And as you can see, I mentioned this channel that we've been within, the top resistance here, bottom support. Mentioned this many times. However, there's also another very critical level, and it is smack in the middle of this channel of the resistance and support. And if you go to the 15-minute, we can get a better glimpse of this. This level right here, this blue line, I've posted on the Chitterflow Twitter a few times this week. And this level, if we go to the hourly chart, actually, you can see that this level goes back to the previous June's low, or the low in June. This was the yearly low for quite a while, and this was the yearly low before we had that big rally that we saw in July and August of this year. And this level is actually where we're at right now post-market, or a little bit below. This level needs to hold for further upside. If bulls want to see further upside in the market, this level needs to hold. If we gap down below it and stay below it, then this is very bearish going forward. And the more we stay below, the more subject to bearish activity it is in the future. So this level is everything for tech right now. We did see some form of weakness after hours just because of Tesla's earnings. However, watch tomorrow, watch Friday, see where the weekly closes specifically. You want the weekly to close above this if you're bullish, and if you're bearish, it'd be the inverse and see the weekly close below. The gap's going to be very important tomorrow and Friday on this. So mark this level on your chart. It's at 269.40. And definitely watch this. It's acted as a key pivot, as you can see throughout the past couple days so far, and this is going to be very important for the future. But other than that, though, appreciate you guys watching this video. Going to be a very interesting few weeks that we have going forward as volatility has maintained its heightened status right now. Other than that, I'll see you guys in the next video.